Hello and thank you. Thank you for being a member at My Finance Teacher. Today I want to have a look at cycles. What are the things that I'm looking at when I'm trying to hunt for cycle lows? And perhaps some confirmations that a new cycle is ongoing. And I'm going to use the example of MJ, where the trade hasn't been really going on well over the last several months. First, let's have a look at some examples of charts of MJ and how do I see cycles on those charts. Basically, market cycles, as I've explained in many of my previous videos, is a sentiment fluctuation on the markets. We want to enter the markets when most of the market participants are really pessimistic about an asset, when this proverbial blood is on the streets. And when everyone is really getting excited about the markets, when everybody is pretty optimistic, that's when perhaps it's a good idea to reduce your allocations. But of course, this is a really vague, very general description of what's happening on the markets. This concept is perhaps easy to understand, but actually implementing it is pretty hard. That's why at least 2/3 of traders do lose money, perhaps even more than that, depending on the statistic that you look at. In this difficult job of trying to catch cycle lows, I try to look at a number of factors that coming together can tell you that, hey, perhaps the market sentiment is pretty low, perhaps that proverbial blood is on the street. So what are the things that I look at? First of all is, of course, I try to find some market sentiments. You can create some of your own models. Perhaps you might collect data from Twitter. And I do have a plan for my website to build in some of our own models looking at Twitter and perhaps looking at some other things. So in future, I do hope to develop my website a little bit further. And of course, one way of looking at market sentiment is looking at this sentiment trader data. And this data can be really volatile from one day to another. So sometimes I also like to look at this 10-day moving average of the optimism index. That's the green line over here. And looking at the history of MJ cycles, that's between late 2018 and late 2019, I see 7 cycle lows. And of course, they are marked with these large 7 numbers, 1, 2, 3, 4, 5, 6, 7. So first, looking at the sentiment indicator, the optimism index on MJ in this case, out of these 7 cycle lows, 6 of them came with this 10-day moving average of the optimism index below this level of 40. We don't see the level of 30 over here, but that's actually the level where this 10-day moving average came to, or lower than that, during the 6 out of 7 cycle lows. Of course, it doesn't always happen. As in March 2019, for example, a cycle low actually took place with only a bit of a modest correction. So not all of the factors that I'm going to mention actually do come together during these cycle lows. But the more factors do come together, the more certain you can be that the blood is there on the streets and perhaps it's time to get some positions. So that's the market sentiment 6 out of 7 times during that year in late 2018 to late 2019. Next, I really like to look at the oversold levels on RSI. Again, we see that during 6 out of these 7 lows, we saw RSI pretty low into oversold or pretty close to oversold as over here in October 2018. And again, one exception was over here in March 2019. So a question here, of course, could be, is it more correct then in that case to count this cycle between mid-December 2018 and the very beginning of June 2019 as all one cycle? And well, perhaps that could be fine as well. But in addition to looking for the factors that show you a cycle low, I also try to look for some sort of cycle lows, perhaps not very obvious ones, that are pretty much closer to an average duration of the cycles. So there is a bit of a balancing act over here. And some other analysts might, of course, have an argument here about number 4. But I do like to follow cycle duration as well, giving me this number 4 over here as well. The next thing I like to look at is breaking below the Bollinger Bands when the Bollinger Bands are pretty wide. So looking at number 1, do we have a break below Bollinger Bands? Yes, we do, but at that time the Bollinger Bands weren't really wide, so it's kind of questionable. Although going back into mid 2018, Bollinger Bands were pretty wide, but there was not much of a break below those wide Bollinger Bands. So a bit of a question mark here, as well as a question mark in March, again, 2019. But out of these 7 cycle lows, 5 of them show us a break below relatively wide Bollinger Bands. So these are all like traffic light signals, something like Formula One, for example. I used to watch Formula One races, I remember, when I was a master's student, and I haven't watched those in over a decade already. But these combinations of factors, I kind of think of them as green lights gradually turning on. The more green lights turn on, the more confidence you have that the blood is actually on the streets. Is it time to enter then? And another thing I do like to compare these cycle lows and cycle tops as well versus some sort of a moving average. I often look at a 50-day moving average as that's a common moving average that a lot of other traders look at. And I see that in most cases, cycle lows do come below the 50-day moving average, cycle tops do come above the 50-day moving average. Alternatively, cycle lows might simply retest the 50-day moving average from the upper side, and cycle tops might simply retest the 50-day moving average from the lower side, as it happened over here in early November 2018. Cycle high didn't go much above that 50-day moving average, just retests it and comes down. So although usually I do try to hunt for cycle lows, looking at cycle tops can also be beneficial, because if the cycle hasn't reached that usual feature of a cycle high, such as being above the 50-day moving average or at least retesting it, one argument that could enter your analysis is perhaps there is still more momentum left in the cycle. Although, of course, it doesn't always happen, as it didn't happen in these 2 out of the 6 cycle highs on the chart. We have these 4 purple circles indicating the cycle highs, retesting the 50-day moving average or being above that, and 2 purple question marks where cycle highs didn't actually rise as high as the 50-day moving average. And when that happens, that kind of makes it difficult to find the cycle low, because the question is the cycle still ongoing? As with this number 5, for example, by the time you are in mid-June, the question might be, are we still in the cycle that's going on since early March, meaning that perhaps a new cycle rally is going to take place soon, or are we in a new cycle that only started in very early June, meaning that if the cycle doesn't perform well, in the later stages of that cycle, there is likely going to be a bit of a decline in MJ. So whenever there is no retracement of the 50-day moving average at cycle highs already, that kind of makes decision-making pretty difficult. I will come back to this topic, but for now let's move on with a bit of more history. This is late 2019 to very late 2020. This number 1 is the same as number 7 on the previous chart. So again, we have 5 cycle lows over here. Out of these 5 cycle lows, the RSI did come close to oversold or dipped into oversold in 3 out of the 5 cycle lows. The Bollinger Bands were broken to the downside when those Bollinger Bands were pretty wide in, again, 3 out of these 5 cycle lows. But importantly, perhaps we want to have a look at market sentiment. And again, we're going to use the market optimism index for that. We see that in 4 cases out of the 5 cycle lows, the 10-day moving average of this optimism index came slightly below 40. At least slightly below 40, as in very late 2020 over here, or all the way down to 30 and below, as in the rest of these red circles. This red question mark in May 2020, the 10-day moving average came close to that 40 but didn't break below that. So do we count that or not? The actual optimism index, which is quite volatile, did come down below 20, so perhaps you could count that as well. But the moves in the optimism index itself were quite quick. You see, the recovery was really fast. So you'd have to watch the market as a hawk trying to catch that cycle low. That would have been quite tricky. So that gives you the sentiment readings on cycle lows, the RSI readings on cycle lows, the pokes below the wide Bollinger Bands. And coming back to the topic of cycle highs, we see that all 4 out of the 4 cycle highs that we see on this chart did come with a move back up above the 50-day moving average, from the cycle lows being below that 50-day moving average. And this is the factor that actually didn't take place more recently in our ongoing MJ cycle. So now let's have a look at what's going on to MJ right now. So far, I've been looking at this as an extremely long cycle on MJ, lasting for so far 172 days. If we've seen the low over here on the 1st of November, that's at least double the usual duration of 84 days. That's the usual duration all the way since mid-2018. Although the longest cycle so far within this period since mid-2018 has lasted for 133 days. So that's still pretty long, and long cycles can stretch far beyond the average duration. So the longest cycle before the ongoing one, lasting for 133 days. Can we have a cycle lasting for 172 days? Of course, nothing is impossible, and nobody knows the future. What we're doing is we try to look at the combination of factors, see how history behaved, and if history rhymes, which it usually does, it doesn't copy exactly, but it often rhymes. That's when we try to build some scenarios with different probabilities of what might happen in future. So perhaps I made a mistake somewhere in summer of this year, and perhaps instead of being in a cycle that lasted for 172 days, maybe I should have counted the end of the cycle over here on 19th of July, where the previous cycle again would have been shorter than average at only 67 days. But how likely is it? The couple of previous cycles before that were also shorter than usual at 66 days and 69 days. Usually the cycle duration after a couple of short cycles brings the cycle duration back closer to the average, giving us a longer cycle. So with that in mind, I was expecting a longer cycle without any expectation of a cycle low over here on the 19th of July. But on the other hand, perhaps we have 3 short cycles lasting for 66, 69 and 67 days, followed by a relatively long cycle lasting for 105 days, again bumping up that average back closer to above 80. And coming back to that topic of cycle tops, retesting the 50-day moving average, we see that back in July this year, the cycle top, if we assume a new cycle started on the 19th of July, the cycle top didn't come anywhere close to this 50-day moving average. That was again another reason why I wouldn't have recognized this 19th July as a cycle low, a new cycle performing relatively poorly, meaning that again, perhaps near the end of the cycle, there would be a bit of more of a decline. And more recently, MJ has actually filled this gap over here around $13.7. And one of the members here did actually suggest that perhaps MJ wants to fill this gap before a bit of a rally might happen. Thanks for that comment. It turns out that you were absolutely right. MJ has filled that gap. Now coming back to that July possible cycle low, one more factor that I look at, but I haven't mentioned this in the previous historical charts as there would be a lot of lines, a lot of mess, is a break above the downtrend line of the previous cycle decline. And that also didn't happen back in July this year. We have a downtrend line over here connecting the local highs within the decline of that cycle, and we don't see a break of this trend line, which again makes it difficult to decide whether we see a cycle low on the 19th of July. I tend to think now that perhaps there was a cycle low over here. So I think I'm going to change the cycle duration numbers over here on the chart. But whichever is the case, MJ looks pretty attractive right now. Bollinger Bands are pretty narrow, meaning that maybe a volatile move is coming. Is a volatile move likely to the upside or to the downside? With such a correction over the last few months, I think a volatile move is much more likely to the upside rather than to the downside. We see a positive divergence on RSI. Yeah, we've seen this positive divergence for several months already, but MJ did continue down. Again, that perhaps comes to my failure to recognize a new cycle which didn't perform well and was ready to continue down for the duration of that cycle. But now, though, RSI is really recovering, with the recent low in RSI only coming as low as the 34 or so. Whether we've seen a cycle lasting for 172 days or for 105 days, in either case, the cycle would be either longer than average or much, much longer than average. So a cycle low over here on the 1st of November is quite likely, especially if MJ breaks above this dropping 50-day moving average. Perhaps that will bring some attention into MJ, which is already 28% below the 200-day moving average. And at the recent low, it was even more than 30% below the 200-day moving average, meaning that it's stretched a bit too much on the downside, and a bit of a correction, a bit of a mean reversion should push it back towards that 200-day moving average. Again, looking back at history at a couple of times when MJ was significantly below 200-day moving average, for example, in November 2019, it was around 46% below the 200-day moving average. And in March 2020, MJ was around 59% below the 200-day moving average. And those were quite extreme levels over the last several years, since mid-2018. So perhaps a 31% drop below the 200-day moving average recently in early November might be enough for a bit of a cycle low and a bit of a rally, at least a relief rally, maybe a volatile move to the upside as Bollinger Bands are narrowing. So as you know from the model portfolio, I continue to hold MJ. I think it's more likely to move to the upside than down. Yes, I should have used some stop losses to get me out of MJ sometime in late summer before the cycle came all the way down to fill those gaps around 13.7. But as I've mentioned, it was pretty difficult recognizing that cycle top in late July. And to conclude, let me just mention that whatever happens to MJ, I hope this review of how do we try to look at cycles, how do we hunt for cycle lows, is useful for your future trading and investment activities. So of course, good luck in your trades.